Hey, I want to switch gears right now, though, and get back to the markets because now we're gaining a little bit of traction to the upside. Investors, though, still eyeballing those safe havens. You know, you've got some moves into these blue chip names, but look at the 10-year Treasury yield, 1.38. That's near an all-time low, which it hit earlier in the session. Japan's benchmark 20-year government bond touching negative territory today, barely positive right now. $11 trillion in global debt is in negative territory. The Bob Wiedemer, who remains cautious. Bob, the source of your concern about the stock market, is it steeped in the economy in general, or is there something else that has you worried?
Yeah, well, it's both. It's kind of fragile. It's steeped in the economy, which is fragile. It's also steeped in the monetary policy. The reality is this market's gone up with money printing, and we haven't been doing massive money printing since August of 2014. And notice the market hasn't gone up. So I'm concerned about any bad economic news, any bad news like Brexit, pushing it down when it doesn't have that support from very loose monetary policy, lots of printing money.
You know, these aren't dumb people at these central banks. I mean, they are world-class economists, and they have a sense of history. What do you think is driving this? Is the action in of itself sort of admission of desperation?
It's a great question, Charles, and that's exactly what I think it is. It's a panic, not a plan. The reality is, what if they didn't do all this massive stimulus? You'd have big problems immediately. By doing the massive stimulus, I think you'll have bigger problems down the road, but you certainly don't have problems right now like you would have if you didn't. So I think they're squirming, they're worried, they're desperate, if you want to use the term. They're smart, but yeah, they're up against the wall, and this is what's working for now, and I think they're going to keep doing it until it doesn't work.
And then the notion of unwinding this and eventually letting all these economies take off the training wheels, remove the punch bowl, whatever you want to use, cliche. At some point, they've got to come to that point, right? They've got to come to that fork in the road, no?
I'd say not really, not a chance in the world. I don't think they're going to want to raise interest rates. I don't think they're not, and I don't think they're going to want to take the training wheels off. I think the only way they'll do it is they'll be forced off. Because let's face it, Charles, if you can print money, not get inflation, not get big problems, why not keep doing it to kind of keep stimulating the market? I think it's only when you get problems from printing money that they won't do it.
Yeah, you just got to worry though when that happens. Is it sort of like the train is so close that you can't move out of the way then? We'll see. Bob.
Yeah, we'll see.
Yeah, thanks a lot, buddy. Really appreciate it.
All right.